Facebook is down bad, guys. $219 per share, and this is down almost 50% from its highs back in fall of 2021. And there's a lot of reasons for this. I think one reason that we're pretty much all aware of is that Facebook itself has been losing more users than it's gaining. And since I don't think this comes to a surprise to anybody, I'm not going to go into that too deeply. But in this video, I'm going to talk about 3 reasons why I think Facebook stock is not a buy right now. Facebook has always had a pretty rocky relationship with the government here in the US. But in Europe, the situation is actually much worse. The European government has a lot more laws and regulations that protect consumers on how their data is used and how it's transferred and how it's basically monetized by companies like Facebook. So what happened recently is that Facebook, or aka Meta, has threatened to pull out some of its biggest services from Europe because of these new data sharing disputes. There are talks of a new transatlantic data transfer pact. And here it says the previous pact, known as the Privacy Shield, was invalidated by the EU Court of Justice in 2020 over concerns that it did not protect European citizens from US government surveillance when it came to personal data stored on US shores. In particular, the court was concerned that US agencies are able to retrieve large swaths of personal data collected by US companies, and that the European citizens do not have an effective way to seek redress if their information is improperly accessed. So, in the next part of this article, it talks about how European leaders are already starting to think that Facebook is bluffing. And they're also saying that losing Facebook, if this is not a bluff, losing Facebook really isn't something that a lot of people are going to, it's not really going to ruin anybody's life. In fact, they're saying that life is better without Facebook, and I can kind of agree with this. A lot of people use their services, so this is probably not going to sit well with many, but again, I mean, it's not something we can live without. And in my personal opinion, I think it is a bluff. I don't think this will happen, but this just adds to Facebook's ongoing problems with the governments in the countries that it operates in. So not good news for the company and not good news for the stock. The next reason why Facebook stock is getting killed, and this reason is probably the worst of them all, this is probably why Facebook stock is not going to move up anytime soon, is changes in Apple's iOS privacy. So, according to this article, this will probably result in a $10 billion revenue hit this year. And what these changes basically do is that they make it so that users have the possibility to opt out from being tracked while they're using the app. So, this is Facebook's bread and butter. They need to be able to track their users' every move so that they can pull up ads and show ads to these users that are very kind of scarily accurate in some cases, because they just have so much data on the users, and until now they've been able to continue collecting it without almost any limitations. Apple first introduced the ATT app tracking transparency feature in iOS 14, which was released for iPhones last year. It's also included in iOS 15, which is running on 72% of modern iPhones, according to Apple. ATT consists of a pop-up that asks users whether they want to be tracked when opening up the app. If the user says no, the app developer can no longer access the IDFA, a device's ID that's used to target and measure the effectiveness of online ads. A study from Ad Measurement from AppsFlyer in October suggested that 62% of iPhone users were choosing to opt out of sharing this ID. So this is obviously a big problem for Facebook because most people who have smartphones now, are at least in the US, are using iPhones. And when given the choice of whether they want to be tracked, most people would say no. And the reason why Facebook has been so successful until now is that people didn't really have a choice. They didn't really know what was going on behind the scenes anyway.
But now that they're given the choice, and since it looks like this feature is going to stay, most people will opt out, and I think this is going to continue hurting Facebook's revenue and profits. Finally, there's the metaverse. What is the metaverse? Who is going to conquer it? And can multiple companies exist in the metaverse? So I'm not going to go into this article too much, but it does talk about basically what Facebook might be using the metaverse for, and what Microsoft might be using it as well, because Microsoft is pretty well known for making enterprise software, and this is what it's done a lot in the past 20, 30 years. In the 90s, Microsoft was basically the king of enterprise software with Microsoft Office and whatnot, and this is going to continue being its focus most likely when the metaverse comes into being as well. Facebook, on the other hand, never really was able to really gain market share in enterprise. It still continued to be more of a social media company, and this is likely going to continue in the metaverse. But the reason why I bring up Microsoft is that Microsoft has been rapidly expanding in gaming. Recently, it acquired Activision Blizzard, and this is just Microsoft trying to expand in that space and trying to basically create its sort of monopoly in video gaming. They're buying out some pretty big developers, and I think that Metaverse is going to be a lot of what it's going to be used for in the future. It's going to be gaming using VR, and if Microsoft can dominate that space, that's going to take a lot of market share away from Facebook. Facebook, when it comes to gaming, it's never been big in gaming. We might remember Farmville from back in the day, but I mean, it just never really entered that space in a serious way. So this is why I think Facebook stock is not a buy right now. I feel like these reasons that I just described are definitely going to keep the stock from going up significantly. They could hurt the long-term growth of this company, and it might look like a deal right now at $219. So you probably won't lose too much money on it, but I doubt it'll go back to its highs anytime soon or ever again. Anyway, that's what I think. Let me know what you think in the comments, and as always, please make sure to like and subscribe. Thanks for watching.